Live from Washington, D.C., this is Balance of Power with Joe Mathieu and Kailey Leinz.
President Trump takes the shackles off Nvidia. Welcome to the Tuesday edition as the White House allows Nvidia to sell its H20 GPUs in China, sending the stock to a new all-time high. I'm Joe Mathieu alongside Kailey Leinz in Washington. Thanks for joining us on Balance of Power. This coincides, Kailey, with a series of investments in AI and energy that the president is making today in Pennsylvania. He's just on his way out of town now.
Yeah, and making some news as he departs Washington, specifically on something he teased earlier today, posting on True Social that there was a trade deal with Indonesia and that details will follow. He is now providing those details, Joe, as the U.S. will be imposing a 19% tariff on imported Indonesian goods. The president said the tariff on U.S. goods going into Indonesia will be 0%. Interesting
way to transmit this information as opposed to a piece of paper. The president right now is talking with reporters in the driveway of the White House on his way out. So we'll let you know more as we learn it. But yeah, redhead on the terminal, 19% Indonesia. I guess we have another box to check, which leaves 70 some odd others.
Yeah, roughly.
Maybe
and we should keep in mind as well that Indonesia was on the receiving end of one of the letters from the president last week. And the tariff rate set out in that letter was 32%. So this is lower, though 19% is still nothing to sneeze at. So this is a story we will follow, not just on Indonesia, but when we consider the trade landscape and the export controls landscape more broadly when it comes to China. We'll have Anna Ashton joining us shortly.
Anna Ashton and our scoop machine. Mike Shepard will be with us as well. Remarkable turn here for Nvidia and AMD, we should note. We'll look at the stocks and check out what this means for these two companies.
Yeah, we'll look at them, and Charlie Pellet's probably looking at them too. So let's get a check on those stocks and markets overall with Charlie up in New York. How's it going?
Thank you very much. Here's what's going on. Both higher right now. We've got Nvidia up by 4.1%. Advanced Micro Devices surging 6.3%. One of a number of major stories that we are following for you. Right now, CPI Tuesday, we have got the S&P 500 index retreating. That stock rally sputtering as bond traders trim their Fed bets. Also, the 30-year, 5.01%, but right to the equity markets, S&P down 13, 62.55, retreating from a record down 0.2%. The Dow down 367 now, down by about 0.8%. Nasdaq Composite Index up 102 points, up 0.5%. Our Mag 7 Index, of which Nvidia, of course, a part, up 0.8%. The 10-year, 4.47%. The 2-year, 3.95%. And again, that 30-year bears repeating 5.01%. Gold lower by 0.5%, 33.28 the ounce. West Texas Intermediate crude now down 1.1%, 66.27 the barrel. And Bitcoin now down by 2.4%, 117,303 on Bitcoin. Earnings news this morning from big banks. Another big story that we're watching. JP Morgan Chase down 0.8% after earnings. Citigroup up 2.9% after earnings, and Wells Fargo after earnings now down by 5.7%. So again, recapping, S&P lower by 12, down 0.2%. And as we have been reporting, as you heard from Joe and Kailey, President Trump to impose a 19% tariff on Indonesian goods. And Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Mathieu and Kailey Leinz.
All right, Charlie Pellet checking out markets on the move and stocks on the move, including Nvidia, as Charlie mentioned, up more than 4% as we've gotten news that Nvidia is going to be able to start selling at least certain chips in China again, specifically the H20 chip, which, of course, from the jump was designed to work around what were existing export controls that the U.S. had put into place in order to restrain China's ability to access advanced semiconductors. This is something that had been tightened, though, and now it's getting loosened back. And Joe, it's quite a reversal, and noteworthy that the reversal comes that Nvidia is going to be granted licenses to sell these chips once more after Jensen Wong has been spending some time with President Trump as of late, including at the White House last week.
Yeah, he sure was. And you wonder exactly what was said in that conversation to turn fortunes not only for Nvidia, but its rival AMD, whose MI308 chips will also be apparently allowed for sale in China, which is why we're seeing both of these stocks jump on an otherwise kind of blah day on the markets. Mike Shepard's a big reason why we know about this, and he's been very close to this whole story for weeks now and joins us now in Washington. Mike, you're the one who broke the news that Jensen Wong was at the White House. Was it as simple as sitting down with Donald Trump?
It really is a question of him meeting with the president again. And it's not his first sit-down face-to-face with the president at the White House. But in a sense, it's the most consequential. Jensen Huang has really been railing against these increasingly tight export restrictions aimed primarily at his chips. And it's not designed to hurt his company, but it ends up doing so. The idea is to prevent this technology, which has potential dual use. The idea is that you want to keep advanced semiconductors out of China's hands. So the argument goes among China hawks here in Washington to prevent China from deploying it in its military or national security apparatus. But for Jensen Huang, this imposes a big cost on the company and on its bottom line. In the first quarter of this year, they reported a $4.5 billion write-down just from those H-20 restrictions. And for this coming quarter, they were looking at possibly $8 billion in lost sales. So there is a consequence there. And this was an important meeting he had with the president.
Well, so talk to us more about the actual capacity of this chip, what it could allow China to do, because I can't imagine many China hawks are super thrilled with this decision.
The early sense that we get is that no, the China hawks are not happy at all with this, but it remains unclear just how forceful they will be in trying to push back against this, Kailey. And when you hear from U.S. officials, and we spoke with David Sachs, the White House AI czar, earlier today on the Bloomberg Tech Show with Ed Ludlow and Howard Lutnick on another network, they each were pointing out that, look, this H20 chip is a few generations behind now the latest that Nvidia has to offer. And it is on par with perhaps the best that Huawei, Nvidia's chief rival, is trying to offer now within China. The idea is this, if you talk to Jensen Huang, that you want American technology to be sold around the world. But if the U.S. is not selling it to China, which is the world's largest semiconductor market right now, you allow Huawei free rein potentially there. And that gives Huawei perhaps a springboard to start selling into some other markets. And that's a risk for Nvidia.
You know, we talk about computer chips. People think about Intel inside, these microchips. These are massive. These GPUs are hardware stacks that require proprietary software to run them. You were talking about this H20. It weighs about 70 pounds, Mike. You've held them with heavy. Your own hands. Can you stack enough of these to replicate the effectiveness, for instance, of a Blackwell? Is that what a China hawk would suggest?
What they would suggest that there are ways to stack these and put it together and run inference learning for AI models to gain ground. And maybe you don't need the perfect when it comes to these AI accelerator chips. But even if you have something pretty good, you're handing something to China that, in the U.S. view, especially among some in the national security establishment, that is not something you want to be giving, our top geopolitical rival here.
Wow.
All right. Mike Shepard, Senior Editor for Technology and Strategic Industries for us here at Bloomberg. Thank you, as always, for joining us on this important and market-moving story. And it's such an important story. It's one that our colleagues on Bloomberg Surveillance had the chance to speak with the Treasury Secretary, Scott Bessent, about earlier today, talking about chip manufacturing, yes, but also how it fits into the wider picture in ongoing trade conversations with China. Here's what he said.
I can tell you the one thing that we do not want is a digital Belt and Road springing up around the world because other countries or China are substituting for our American chip manufacturers.
This is the same chip, though, that the Trump administration blocked with export controls in April. So why the change in policy now?
Anne-Marie, you might say that that was a negotiating chip that we used in Geneva and in London.
So this was part of the trade talks when it comes to Washington and Beijing?
Yes. Was
it a quid pro quo then? As you said, it wasn't, but was it potentially to make sure that you can get the licenses when it comes to rare earths?
Yeah, I think it was all part of a mosaic. They had things we wanted, we had things they wanted, and we're in a very good place. I expect to meet my Chinese counterpart, the vice premier, in the next few weeks.
So when and where will that meeting take place?
We're still working on that. The Chinese leadership has a big conclave at the beginning of August, so we're trying to work out whether that could be in a third country before or after that conclave.
Will the administration release the framework of the Geneva and London talks?
Well, we have released some of it, and I'll tell you that now, having settled on tariffs, on the export controls, we can move on to the next stage of talks. And I think it's very important, both for the global economy, for the U.S. economy, and for the Chinese economy, for us to move on and talk about China opening its markets and the increased domestic and consumer production there.
Are you hoping to get to that next phase before August 12th, when that's currently the détente between these two economies?
Yeah, I think we're in a very good place, and I tell market participants not to worry about August 12th.
With the Treasury Secretary Scott Bessent, our colleagues on Bloomberg Surveillance. When you add that to what we just learned from Mike Shepard, we want to talk about all of this with Anna Ashton, the founder of Ashton Analytics, a specialist in U.S.-China trade, which is why we bring her on so often, former China analyst with the Department of Defense. Anna, it's great to have you. Welcome back to Bloomberg TV and radio. I'm wondering your thoughts on this about face when it comes to chips from Nvidia and AMD. Is this in the best national security interest of America?
Well, I think it's important to note that not only are these not the only things that the Trump administration has recently rolled back in terms of export restrictions, but all of the things that they've rolled back so far are things that they themselves imposed this spring, either in April or in May. So when Treasury Secretary Bessent indicates that these were, chips that were part of the London negotiations, I take that at face value. They imposed more restrictions on exports of certain goods that they believed to be strategic for China in order to have bargaining power to try to get China to speed up its exports of rare earths.
Well, so when you talk about the walkbacks we've seen from this administration on various fronts when it comes to China, how much of a dovish turn would you characterize it as, Anna? And if it is indeed a dovish turn, how upset do you think China hawks in and around the administration and elsewhere are about these moves?
Well, look, I definitely think that China hawks are going to be upset, regardless of whether the rollbacks are of restrictions that were imposed recently by the Trump administration or of previously imposed restrictions, because from a China hawk perspective, none of this technology should be going to China at all. But I also think that in terms of trying to measure whether or not this is a dovish turn by the Trump administration, we still have to wait and see. Because at the end of the day, this will only be a truly substantive change in U.S. policy towards China when it comes to export controls and access to critical U.S. technologies if we see a rollback in Biden-era export controls. I certainly think that that is something that China wants. And it may be, it's possible China will get something like that. Because we know that rare earths exports, the licensing approvals have picked up, and there's some evidence to indicate that shipments are beginning to flow more smoothly. But certainly, there's no approval of anything to go to military end users, for example. Things could always be faster than they already are, and they're not as fast as they were prior to these restrictions on exports of Chinese rare earths and magnets being imposed. So we'll have to see whether or not the Trump administration is willing to give ground on any Biden-era policies.
Well, do you worry more about the next DeepSeek emerging, or do you go back to your role at the Department of Defense and worry about what China might do with this technology when it comes to building weapons?
I think that whether or not China gets this technology from the U.S., I think that this buys China time to continue developing indigenous technologies without losing the ability to apply these technologies in various ways that are important for them in the near term. But China has been throwing enormous amounts of money towards indigenous development of its own technologies so that it won't have to rely on the United States anymore. It's been doing that for a number of years now, and it's been doubling and tripling down on that. I think it's only a matter of time before China doesn't need U.S. technologies in order to accomplish the various ends that it's trying to accomplish. And so that's happening regardless.
Well, speaking of matters of time, Anna, we just heard from the Treasury Secretary moments ago suggesting that August 12th should not be viewed by market participants as a deadline they should be worried about. Does that suggest to you that there is a lack of forward progress in reaching more of a trade agreement between the U.S. and China? Should we consider any of these deadlines to be real at this point?
Super fair question. It does suggest to me that they have yet to make it past serious discussion, make it to serious discussion of things beyond rare earths. I feel like rare earths has been the hair on fire crisis for the Trump administration, particularly because of the heavy rare earth magnets that are so important not only to electric vehicles, but also to traditional combustion engine vehicles and to so many electronics. And I think that, that will continue to be something that China can use as leverage to get the U.S. to the table. And until that is satisfactorily resolved in the U.S. mind, it will be hard to move forward on negotiation of other issues. I think it is worth noting that a couple of key heavy rare earths that are used in these magnets that have been in short supply, like dysprosium, for example, and neodymium, those also are not, they're primarily sourced from Myanmar. And the state in Myanmar that they're primarily sourced from has been incredibly unstable due to domestic conflict for the past six to 8 months. And China itself is having a hard time getting these things. So it's just worth keeping in mind that China is not necessarily simply using these rare earth export licensing restrictions to gain leverage vis-a-vis the U.S. It is also thinking about its own supply security. And that may limit how much it can negotiate.
Do you want to see President Trump, President Xi in the same room? Do you want to see a summit? And is that, in fact, where the president might be most likely to give up the ghost on this and lower export controls, to your point, from the Biden administration?
From the perspective of somebody who would like to see a more functional and healthy U.S.-China relationship, that sounds like a really nice thing. When I'm thinking about it in terms of strict U.S. interests, there are things that could certainly be gained there. If I put on my China hawk hat and look at it through the lens of security concerns, these are really difficult trade-offs. And a meeting that caused President Trump to relax export controls, bigger, more fundamental export controls on advanced technologies to China might not be in the U.S. interest.
Anna, we learned from President Trump yesterday that if no ceasefire agreement is reached between Russia and Ukraine within 50 days, that he will look to impose 100% what he described as secondary tariffs on countries that help Russia, including big buyers of Russian oil. Read China. How do you expect Beijing would respond if indeed something like that were implemented? Would their behavior be, okay, we're going to stop buying cheap Russian crude and exports, or we're going to potentially retaliate against the U.S. with tariffs in kind?
China certainly can't stop buying Russian crude or gas. And that's because it gets an even bigger percentage from Russia than it did before the Ukraine war started. And, it's pretty heavily reliant on Russia. Russia is one of its main suppliers. So that's not in the cards. What is potentially in the cards is use of smaller companies instead of their main oil and gas companies, which is already to a large extent the case, to move that oil and gas and therefore sort of shield China's broader economy from any secondary sanctions that are imposed. If the secondary sanctions don't hit the big banks that are, if the big banks aren't processing these transactions, then, China can kind of prevent calamity from ensuing as a result of the sanctions. And we've seen them do that with their purchases from Iran as well. That's what I would expect that to be their first move.
Well, so Anna, if I read you correctly, if China's not going to be able to actually adjust its purchases of Russian oil, would that mean that these secondary sanctions, tariffs, whatever you want to call them, would not have the intended effect the president wants here, which is to put the squeeze on the Russian economy and stop them from being able to fund their war machine?
I don't think that they would have the intended effect, because I think that, other countries that are buying from Russia might not have the same safeguards in place to protect them from secondary sanctions, but China certainly has safeguards in place, and China is the biggest buyer. So, I think that we've been learning the hard way for a few years now that there are limits to the power of U.S. sanctions, and they don't always achieve what we hope that they will achieve. And I don't think that secondary sanctions on all sales of Russian oil are necessarily going to achieve what Trump wants.
All right, Anna, we appreciate you joining us as always. Anna Ashton is founder of Ashton Analytics, a specialist in U.S.-China trade and economics, of course, a former China analyst at the Department of Defense, here with us on Bloomberg TV and radio. And as we discussed with Anna, the threat of secondary sanctions and the deadline Russia is now facing down, perhaps that deadline too, Joe, is a little bit squishy, as the president suggested to reporters that it could be sooner than 50 days for the Russia deadline.
Deadlines. We remember there was a 2-week deadline, I think, for Iran, and strikes took place only days into that period of time. So it might be a case of as many as 50 days when it comes to this administration.
Yeah, so that headline and others we've gotten from President Trump as he spoke with reporters upon departure from the White House. We are expecting to get some tape rolled back on his remarks. We'll, of course, bring that to you here on Bloomberg TV and radio when they begin. But we also want to check in on financial markets on this CPI day. So for that, we turn to Charlie Pellet, who has a look from New York. Hey, Charlie.
Hi, thank you very much. CPI day today, PPI tomorrow, and right now we are trading at just about the lows of the session. Right to the numbers here. Relatively tame inflation data failing to ease Wall Street's worries about the impact of tariffs. The S&P now lower by 12, 62.56, down 0.2% as of now. Worth pointing out, though, that briefly during this morning's session, we did trade as high as 6,300 on the S&P. The Dow now down 357, down 0.8%. Nasdaq Composite Index, though, on the China chip news, up 96 points, up 0.5%. Nvidia up 4%. Advanced Micro Devices up now by just about 6.1%. 10-year 4.48%, the 2-year 3.95%, the 30-year back above 5%, 5.01%. Gold down $12 the ounce, 33.31, down 0.4%. West Texas Intermediate crude down 0.9%, 66.38 a barrel. And Bitcoin now down 2.4%, 117,310 on Bitcoin. So again, stocks lower. Nvidia and Advanced Micro Devices plan to resume sales of some AI chips in China after securing Washington's assurances that such shipments will get approved. Shares of both companies and other chip makers higher. Nvidia up 4.1%, Advanced Micro Devices up 6.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your hosts, Joe Mathieu and Kailey Leinz.
All right, Charlie, many thanks. Charlie Pellet live from New York watching Wall Street for us, and we'll get another check on the markets a short time from now as we follow President Trump in his travels. He's just left the White House, and we do expect to be hearing from the president. Some tape coming from a conversation he had with reporters on his way to Marine One, which just touched down at Joint Base Andrews. The president on his way to Pennsylvania, Kailey, to talk about AI and energy, a series of investments that will be announced a little bit later on today. Of course, he also, before he left town, wished everyone a happy crypto week and called on all Republicans in all caps on Truth Social to vote yes for the Genius Act and the Clarity Act.
Indeed. And of course, there's a third piece of legislation that's going to be considered as well, that anti-CBDC bill, essentially the three of them together comprising Crypto Week. The question is, can all three of them actually pass in the House of Representatives and then in the Senate for those that hadn't originated in the lower chamber? So we want to get a look at that now as we turn to Republican Congressman Mike Flood, who is with us. He, of course, represents Nebraska, its first district, and as a member of the House Financial Services Committee, in addition to being vice chair of the Republican Main Street Partnership. Congressman, thank you for being here. Of course, the Genius Act, the stablecoin legislation, passed the Senate. It does seem there's a lot of optimism that you will be able to pass that in the House. But what about the Clarity Act, the market structure bill? Are you as optimistic about its fate?
I really am. You know, Patrick McHenry, when he was chair, worked hand in glove with French Hill on digital assets. Our chairman now, French, is taking this to the next level. Listen, the House has been a leader in this space. We know what we're doing. We have been at this for several years. The Clarity Act will pass. In fact, last year when we did market structure in the House of Representatives, I think we got about 71 Democrats. So I don't know if we'll get that many this time, but this is a bipartisan piece of legislation that meets with the favor of a great majority of folks in both chambers. And I'm confident that Crypto Week will be a success, and we will finally have a bill signed into law on stablecoins. Now we have to urge the Senate, after we pass the Clarity Act, to do the same in the upper chamber so we can move this forward.
How do you close the deal on that, Congressman? And welcome back. It's good to have you on Bloomberg. The Genius Act is one thing, but indeed the Clarity Act appears to be something different. And if you need Democrats to make this happen, a lot of them say that they'd like to see language that removes President Trump and his family from crypto investments. That appears to be the cause of the allergy that many Democrats have here. Would that help it get done? Is that possible?
I'm sure that's what they're asking for. I know that French Hill, our chairman, has been working with Senator Scott in the Senate. Listen, we're about anything that gets us over the line. I'm hopeful that the Senate will prioritize market structure like we have in the House, because, yes, it is a win to have stablecoins, but you can't have one without the other. There's no clarity. The reason we named that bill that is right now under Gary Gensler, when he was in charge of the SEC, he thought everything was a security. The CFTC obviously should have authority over Bitcoin. We have to pick a lane, know where you're going, and that's why the Clarity Act getting done this year will send the signal to every other country in the world that the United States will remain the world's reserve currency with the dollar, and transactions in Africa, transactions in South America, they will be built on the strength of the dollar, and that's why we're so about getting this done in a quick manner.
Congressman Mike Flood, Republican, with us here representing Nebraska's 1st District. Congressman, it's great to have you, and I hope we'll have more time when you join us next.
On the trade front, when it comes to Indonesia, suggesting Indonesia is going to face a 19% tariff on its imports into the United States, while the United States will face no tariff on its exports to Indonesia.
A good deal, I suppose, for the United States. I don't know if we've heard from Indonesia on this. There's been no paper on it. It seems to be an interesting way to roll out a major trade deal in the driveway of the White House. But let's get into it with Anna Wong, who is with us now. Of course, Bloomberg Economics chief U.S. economist. Anna, 19% Indonesia, assuming that this is confirmed, means what for our trade relationship?
Well, I think it means that the aggregate tariffs would go down a little bit, but I think generally it doesn't really. It's just a drop in the water. Yeah. The main trading partners who we really want a trade deal with is really Japan, EU, China, Canada, Mexico, and those are really the ones that will make a dent on the aggregate tariffs and inflation ultimately.
Well, the president did talk about the EU, saying that we're making progress with Europe, but we already have the letter, knowing that he's suggested that these letters in and of themselves are deals, which would suggest a 30% tariff on the EU, which he's threatened for August 1st. The question, though, Anna, is to what extent tariffs already, not just the ones that are threatened, but the ones that are in place, are feeding through the U.S. economy. When we look at what was once again a more muted print on CPI, at least on the headline, it would suggest that not yet. But talk us through what's actually going on underneath and whether or not we actually may be seeing more tariff effect than meets the eye.
Yes, so today's CPI is the fourth straight soft report. However, in the details, it shows a much brisker pace of tariff pass-through. In fact, I think market participants all pretty much agree that this is the first real tariff print of the CPI print that's littered with tariff effects. Appliances, washing machines, clothing, men's clothing, women's dresses, everything, audio equipment. You could see a pretty broad-based tariff effect. However, at the same time, hotels costs went down and shelter costs went down. And as a result, the overall print is not as high as it would be. So I think the takeaway of many people is that going forward, we may see even more tariff pass-through.
I guess that was my question. If this is the start of a trend, what are we going to look like 6 months from now?
Yeah, so I think 6 months from now, critically depend on what happens on August 1st. Okay. And if Trump were to make real many of these tariff threats, it means that aggregate tariffs can go up as high as low 20s, which could deal a shock to S&P 500. And because I think right now markets are not really priced in for a big rebound on the tariffs level. And I think that shock, if it generates a repeat of Liberation Day type of shock, could lower consumer sentiment once again. So because we just saw a little brief rebounds, that could be short-lived if tariff levels were to rebound.
Okay, so if we're thinking about the tariff level 6 months ago, I feel like you can't answer this next question without knowing what that is, or 6 months from now. 6 months from now, where could the Fed funds rate be, depending on where tariff levels are? Because the president once again argued just now that rates are still too high. He wants to see a cut. Does this data suggest that the Fed is going to be prepared to do so?
Yes. So the Fed really cares about core PCE inflation. And I think that the core PCE reading for this month will be much hotter than the CPI today. In fact, our estimate is for core PCE inflation to be around 0.34 in that vicinity, which is almost twice as high as the last month. And I think to the Fed's perspective, that they might look at this and think that they have been correct in holding rates constant.
The president just said, as part of that conversation, that the U.S. should have the lowest interest rates in the world. If we did, wouldn't that mean we were going into or coming out of a recession?
Well, there are many reasons why rates could come down, but certainly I think the current macro situation with so much uncertainty and unknowns about where trade policy could go, Fed was acting in a cautious way and not cutting rates in case that tariffs were to increase or and cause inflation to flare up. So that's the Fed's perspective.
All right, Anna Wong, chief U.S. economist for us at Bloomberg Economics, reacting to President Trump's remarks from moments ago, as well as the inflation data we got today. Thank you so much. And we want to check as well on how the markets are interpreting this data and what it may mean as we get a check on those from Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kailey. Leinz. Little change on the S&P 500 index in the red, down by 6 points right now. That is a drop of 0.1%. Relatively tame inflation data failing to ease Wall Street's worries about the impact of tariffs. Initial rallies in stocks and bonds have sputtered on bets that the Fed will keep rates on hold for now. The Dow, though, down 335. That is a drop of 0.7%. NASDAQ pushing higher on China chip news. Right now, we've got NASDAQ up 121, a gain there of 0.6%. Those chip names, by the way, Nvidia up 3.8%. Advanced Micro Devices up 6.4%. 10-year 4.48%. The 2-year on this CPI Tuesday 3.95%, and the 30-year at 5.01%. Gold now down 0.5%, 33.28 the ounce. West Texas Intermediate crude down 0.9, 66.36 a barrel. Balance of Power continues right now, and back we go to Washington. Once again, your hosts, Joe Mathieu and Kailey Leinz.
All right, Charlie Pellet in New York, thank you so much. Joe Mathieu and myself, of course, in Washington. President Trump, however, is no longer in the nation's capital. He is on board Air Force One, bound for Pittsburgh, where he will be attending the Pennsylvania Energy and Innovation Summit later this afternoon. It is underway, in fact, right now as we speak, and that's where we find our colleague Tyler Kendall, Bloomberg Washington correspondent, who is in the field for us today. And Tyler, of course, this Energy and Innovation Summit is really all about artificial intelligence, and you've been having conversations around that all day today. Tell us more.
Yeah, hey, Kailey, exactly right. We're here to talk about the future of the U.S., trying to keep an edge when it comes to AI, but a big part of that is finding the energy to fuel it, because it's actually kind of difficult to pinpoint just how much energy artificial intelligence uses, but we know that it uses a lot and that the demand is only growing. A recent analysis from Goldman Sachs shows us that energy from AI data centers is expected to increase by 160% between now and 2035. So there is this huge surge in demand. So that's a big focus of the conversation here today. And I actually had the chance to speak with the Energy Secretary, Christopher Wright, about this idea that the administration is trying to use deregulation as a way to boost energy production in the United States. But I also was asking him about costs and how tariffs come into the picture. In particular, as you're about to hear, how that 50% tariff on copper that's set to go into place on August 1st will impact the industry, considering that copper is really essential when it comes to getting this power over to the AI data centers.
Well, I think the biggest impact of that 50% tariff on copper is going to speed up copper mining in the United States. We have enormous copper resources here. We have some huge mines that have been trying to get going for years. We want to get copper production growing rapidly in this country. Copper, like steel, is just essential to everything that happens in the world.
Should we expect the energy industry to get some sort of tariff carve-out moving forward?
I believe the president plans no special carve-outs. He wants to reindustrialize the United States of America. There's a lot of tools to do that. Make it easy to invest in the United States, make it attractive to invest in the United States, and tariffs are an additional element of that toolbox.
I'm sure you're talking to industry, though. Is a carve-out on the table? Are there any negotiations underway for, say, the oil industry to get a carve-out when it comes to the equipment that they use in the field, like copper or steel, for example?
No discussions right now. We are hearing from the industry, and of course this is true. If you incrementally raise the cost of projects, that hurts the economics of them. We want to do everything we possibly can to maximize investments in the United States so jobs and opportunity come here to our country.
Lastly, I just want to ask you a geopolitical question, because we did hear from President Trump yesterday threatening a 100% so-called secondary tariff on countries that import Russian energy supplies. If that were to go into effect, what would that do to prices in the global energy market?
Something like that would likely drive oil prices up. I think President Trump's strong agenda there is to end the war in Ukraine. Our hope is that that large pressure will have an impact on Russia, and we can bring just a brutal war in Eastern Europe to an end. That's President Trump's goal, is prosperity at home and peace abroad. And the old formulas weren't working very well in that respect. So yeah, President Trump has very different tools, very different negotiating skills, and very different level of boldness. I think we're going to see tremendous growth in peace abroad and prosperity at home.
Joe and Kailey, I want to point out something there, which is that he said that carve-outs aren't really on the table at this point, but I did speak with the head of the American Petroleum Institute, which represents the industry, and they said that they are lobbying the administration for some sort of carve-out, even if it were to be short-term, in particular, to help get some sort of relief when it comes to the supplies and the materials that go into the infrastructure that helps them move the energy, such as copper or steel.
Tyler, I want to ask you about this summit that you're attending. Of course, the president's on his way to you right now. $70 billion, as you've been reporting, in corporate investments, the likes of Blackstone, CoreWeave. What else is happening there on the ground that we're going to learn about today when we connect the dots between AI and energy?
Right. So, Joe, these investment announcements really are spanning where the money is going. It could be for data centers or the energy infrastructure. Of course, as we're discussing, perhaps more money behind drilling in order to get the energy levels up to meet the production demand. But it's also about this idea of training the AI workforce and AI apprenticeships, for example. Those are some of the themes that we are expecting the president to touch on. The administration really has taken sort of a broad approach when it comes to trying to maintain this edge in artificial intelligence. It's that part of engaging with the private sector that we often hear President Trump talk about, this need for investment to come into the United States in order for the U.S. to compete, paired with the other part of their deregulation agenda. And of course, deregulation, we talk about it with energy, but it is a really big topic when we are discussing artificial intelligence. We saw basically this play out during the reconciliation package when some of these big tech companies weren't happy with how that ultimately shook out, with one of those provisions being stripped out that would have imposed that moratorium when it comes to state regulation. So these are all some of the big questions that are being debated here today, as we really do see this coming together of the administration, but also the private sector.
Well, and Tyler, just quickly on that deregulatory effort, is there a sense that that can happen quickly enough that energy supply specifically can be unleashed with demand rising exponentially to power artificial intelligence?
Well, it depends on who you ask, and I actually posed that exact question to the Energy Secretary, who said that yes, but it's going to be difficult. A lot does need to happen in order to get this up to the sort of levels that we need to see, and I mentioned it before. Right now, there's not really a number of just how much energy AI uses. We just know that the demand is going up. But if you ask the private sector, they say that they are ready, willing, and able. They just need to see the deregulation environment behind it. For example, I spoke to the Constellation Energy CEO, who has inked some pretty big deals with Microsoft and Meta, for example, to have nuclear come into the picture. And he told me the same exact thing, that they are ready to go, but they really just need the regulations out of the way. Of course, this poses other issues for why the regulations were in place, and that's a whole other debate that we could get into.
Really interesting. Boy, you're keeping good company, Tyler. Spending time with the stakeholders today in Pennsylvania, Bloomberg Washington correspondent Tyler Kendall, in advance of the president's arrival at the Pennsylvania Energy and Innovation Summit. Pretty interesting stuff, Kailey, that we'll be talking about more on the late edition here of Balance of Power. President Trump on Truth Social saying the U.S. will be the undisputed king of artificial intelligence, something that he's been leaning into for months now.
Indeed, as he leans into other things as well, encouraging Republicans to pass the various crypto bills that are coming to the floor this crypto week. We're going to have more on that in the late edition of Balance of Power. We'll actually be joined by two members of the U.S. Senate. Senator Tina Smith will be with us, the Democrat, of course, and Republican Senator Thom Tillis, who's, of course, not seeking re-election.
I'm looking forward to that one. He can speak freely now, and he will on Bloomberg TV and radio starting after 5 p.m. Eastern, so we'll meet you back then. Alongside Kailey, Leinz, I'm Joe Mathieu. This is Bloomberg.